All right. Good morning, good afternoon, good evening to you, wherever you are in this beautiful world. Welcome to our Tuesday morning Inner Circle Live session. I'm your host, Ryan Carthage. I hope everybody is doing well today. So we're going to dive in. Got a lot to catch up on. We'll take a look at some fundamentals. We will then dive into the charts and see what is happening. So, as always, let's turn off all distractions, prepare your minds and your bodies to engage, as you guys always do. And for the courtesy of everybody on the call, please ensure that your mic is muted if you're not actively asking a question or making a comment. All right. So, let's get to it. Real quick, drop me a maybe. Hold on one second. Here we go. Drop me one in the chat if you can hear me okay, and if you can see my trading economic screen. Yeah, we're good. All right, beautiful. So overall, global stocks rally. Stocks around the world rose for a second day on Tuesday, tracking a fall in global bond yields amid expectations that central banks could soon slow monetary policy tightening. The RBA hiked rates by less than expected, while weaker manufacturing data reduced bets on the more aggressive policy stance by the Fed. Both the DAX and the Stock 600 gained almost 2%, while the Nike 225 jumped 3%. U.S. futures also pointed to a big rally at the open. All right. So we got a little bit of a boost in the stock market, some positive sentiment due to some numbers coming in a little short. All right. RBA, Reserve Bank of Australia, raised cash rates by 25 basis points to 2.6% during its October 22 meeting, defying market estimates of a 50 basis point hike, while bringing borrowing costs to a level not seen since July 2013. The move followed a 50 basis point hike in the prior 4 months and a 25 basis point rise in May. The board said that inflation in Australia was too high, as was the case in most countries, and that a further increase in prices is expected over the months ahead. All right, so they're expecting inflation to continue to increase. The 2022 CPI inflation is expected to be around 7.75%, a little above 4% in 2023 and around 3% in 2024. Policymakers reiterated they expect to increase rates further, with the size and timing being guided by incoming data. The committee remained resolute in its commitment to bringing inflation to target levels and will do what's necessary to achieve that. All right. It'll closely monitor global economy, household spending, and wages. So they increased rates, but it was a pretty dovish statement, right? So this increase that fell below expectations is one of the things that's given investors a little change in sentiment, or a little bit of hope that the Fed is going to start to slow down or reverse their course. We'll see what happens, because the Fed hasn't made any statements signaling such changes. Eurozone producer price inflation hits new peak. Producer price inflation in the euro area hit a fresh record high of 43.3% year on year in August 2022, up from a 38% in July, slightly above market expectation of 43.1%, mainly boosted by soaring energy prices, right? So more pressure on the ECB. The read, coupled with a stubbornly high consumer price inflation, adds to concerns over the impact of mounting inflationary pressure on the bloc's economic outlook, and increasing pressures on the ECB to continue raising its interest rates, right? Energy costs were up 116.8% from a year earlier, and non-durable consumer goods prices increased 14.4%, right? Meanwhile, inflation slowed for intermediate goods, and was unchanged for capital goods. So overall, inflation in the euro area is still on the rise, right? Still on the rise and in a big way. So that's the euro area. And then we had there was another on oil, but government bond yields around the world were lower in the first week of Q4 amid bets that central banks around the world, especially the Fed, could soon slow the pace of monetary policy tightening. Fresh ISM manufacturing PMI figures showed an unexpected slowdown in U.S. factory growth. The Reserve Bank of Australia already delivered a smaller than expected 25 basis point hike, saying it wants to assess the outlook for inflation and economic growth. At the same time, a step back in a tax rate cut for big earners by the new British government also helped calm investors' nerves. The U.S. 10-year Treasury note fell to 3.6%, easing further from a 12.5-year high of 4% hit on September 27th. So bonds are coming down a little bit, right? So we got some retracements in the market. Now, what I'll say as we get ready to hop into the charts is the Fed hasn't said that they're going to slow down. So my thoughts are that from a fundamental perspective, these are just retracements in preparation for a continuation. But we'll see how the market plays out. So over the past couple of days, yesterday, ISM manufacturing came in below expectation, but still at or but just slightly above the 50 mark. So for this ISM manufacturing, it's a survey of manufacturing purchasing managers, and anything above 50 indicates expansion, right? Anything below indicates contraction. So still expansion in the market is just below the expectation for that level. So there's a little back and forth there. Cash rate for Australia, right? There's that number there. Later on today, this evening, we have a cash rate for the New Zealand dollar, right? So that's coming at 9 o'clock this evening. Then tomorrow we have ADP, non-farm employment change, which is could potentially be a precursor for the Friday event of non-farm payroll. We have services PMI coming out for the dollar as well, another inflationary measure. Governor Macklem out of the Bank of Canada speaking tomorrow, Thursday at 11:30. And next big numbers that the market is going to be looking at is here and the non-farm payroll coming out on Friday, right? So the same cycle continues. This is what we'll be preparing for, along with this New Zealand dollar cash rate coming out this evening. All right. So that's it from a fundamental perspective. Any questions here? Cool deal. So what we'll do is we will take a look at the DXY. Then what I want to do is I want to just do some fresh markups on the Aussie pairs and Aussie crosses. We'll see how many we get through this morning. All right. So the DXY, the dollar index, right? You see we pushed, creating some bounce back to the monthly for a second, right? We created a new all-time high on the DXY last month, right? Strong push to the upside, broke the previous levels, right? This was a previous high here. Okay. Pushing back below that now, but we're in new territory. Okay. We're in new territory. So that's from a monthly perspective. Back to the daily. Okay. We created a new AV boundary off that swing high. And just so we get a good look at the fib, we'll drop the fib here, like so. All right. So fresh AV boundary, push into that 118 and 127 zone, created a swing high, and now we're retracing, right? So in an up retracement zone. back below the all-time high level, back retesting this B boundary zone. Okay, so we'll see how far this pullback goes. And we'll monitor things once we get back to this daily support level here. Okay, but now the DXY is in retracement, so that means your dollar crosses are also pulling back. Okay, which we expected. This was on the 4, on our fib off the low. There we go. Okay, so on the 4, similar to the daily, right? We came just shy of that D extension. We did get to the 382, right? Didn't get to the D extension though. Okay, so we're in this retracement now. Again, retesting that B boundary. We'll see what happens as we push a little bit lower, potentially coming back to this daily support level. You do have some 4-hour support levels within, but I'm watching this daily support level and see how price responds there. So we could be in for retracement for a little bit longer on the dollar. Okay, so once we get back down here, we'll look to see if we get this bounce. Like so. Okay, and then we'll play things from there. Okay, so that's the DXY. Any questions on the dollar index? No. All right. Cool. So let's do some fresh markups on these Aussie pairs. I want to take you guys through the process. We got some newer folks with us. You can see it live and see how I move through this thing, and we'll do it together. All right. So starting on the monthly time frame. All right, we zoom out to get a full view, right, of the ultimate range. Shauna, good morning. The ultimate range that the market plays in. All right. Like so. Extreme highs, no extreme lows. Okay. So now we drop in our support and resistance. All right. It's good to zoom out so that you can see the full picture, right? If you stay zoomed in, you'll get caught in the details, caught in the weeds, and you can miss out on what's actually happening overall in the market. All right. So we will drop these levels in. So there we go. Like so. All right. Now we'll take these, we'll link these down to our lower time frames. Turn those off. All right, so that's our monthly support and resistance. Now down to the weekly, doing the same thing, right? Looking for those swing highs and swing lows. And here we are. All right. But you can see overall, right? We're pressing down. All right. We're pressing down. Okay. Created a swing low here back in July. Pressed up. Now we're coming back down, right? Let's see if we retest that low or break it. Okay. So that's your weekly support and resistance. This support level here is right in line with that monthly support. So that stays the same. Okay, it stays the same. So we have that there. Pull those off. And we'll link these levels down. Okay. Send those down to lower time frames. Now we'll drop down to the daily. So, okay. And again, right? Starting to see a little bit more detail now, okay? But pressing down. So we got daily levels here. daily level here, there, and there. And we got a support level here that we created last week. Okay. Came back to retest. Now we're ranging, right? Sideways push. Okay, we drop down into the range here, and now we're just bouncing back and forth. Okay, so overall, in the shorter term, right, we're just in a range, just in a range. Okay, so now what we'll do is we'll run our fib on this pair from the high here, see where we are from a Fibonacci perspective. That one got taken out. There we go. So daily time frame, we got a 618 retracement, pressing down, almost a double bottom look, but we got a double bottom scenario here in this sideways push. Okay, but bias overall is down, right? We haven't gotten anything to tell us anything different. Reserve Bank of Australia, yes, they raised their interest rate. However, it was a very, very dovish conversation afterwards, right? And that statement. So still looking down with downward pressure on the Australian dollar. Okay, so our matching D extension off the daily time frame is here. Okay, that's our matching D extension based off of the retracement that we got there. Okay, so we'll mark that. We'll take these daily levels and that D extension down to our lower time frames. So like so. All right. So now on our 4, we're looking for the same thing, right? So I don't go any lower than the daily time frame for my support and resistance. These levels are extremely key for me. That'll keep my eyes on. If you want to take your support and resistance further, by all means do so. Okay. But so here on the 4, right? We'll run our fib from the high, bias is down. So look at it from that perspective. Here, 618 retracement, been bouncing around in this range as we saw from the higher time frame. Here's the detail, this double bottom look here, and we'll see if we press back higher to get back to that daily level, or does this finally turn over and break this support level? Okay, so this daily support level is going to be key for us to press down. 4-hour D extension is here. Our daily D extension is here. Okay, so this daily level is going to be key for us to see if we're able to get a break of that zone. Okay. See if we get a break of that zone. And then see if we get this continuation down. Okay. But overall biases to the downside. So now we'll go down to the 1. Take a look at it from the 1-hour perspective. Okay. Hold on one second. All right. So our bias is to the downside. So we'll run our fib from the high here just to see where things fall. There we go. Got taken out. There we go. So here on the 1, similar story to the daily and the 4-hour, right? 618 retracement, matching D extension on the 1 is below this monthly support level. Okay, below the monthly support level. So what we also have here, right? So we got that nice retracement, but we also have the crown reversal pattern here. Right? Crown reversal pattern. So this tells us reversal opportunity. We did get this push back to the upside. Okay. We let's see. And that came in just shy of a 786 retracement. This fib that I drew here is just a harmonic fib based on this pattern. Okay. We came just shy of the 786 level, right? So this is considered a 618 retracement. The matching D extension is here. Okay. We did get this sharp pushback to the upside. Now we're coming back down. Okay. So expectation for this is to continue to the downside, right? Give us that break of that daily level, get to this harmonic D extension. Our 1 hour D extension is here, right? So I'm looking for this to continue to the downside, right? This play is already in motion. So if you're not in it, I'd hang tight. Okay. I'd hang tight and make sure everything is based on your rules before you enter. But bias on this one's to the downside. Okay. Any questions on this Aussie CAD? Cool deal. Aussie Swiss. Aussie Swiss. So there we go. Monthly time frame. Same thing. Same thing. Same thing. All-time high. Now all-time low. Right. And you see, still been pretty much sideways, right? Even in the short term. Okay. So support and resistance. Okay. Like so. Got those two levels right there. We'll just take the one and then we'll get that level there. Okay. That's that. This was a previous swing low here, right? And if we put a support level there, you see we came back and we retested that level, right, off of this break. Strong bearish break, came back and we retested that level. So I'm going to keep that level in there so we can monitor that from a lower time frame perspective. Okay, so we will take these levels down to our lower time frames, and we'll move to the weekly. Okay, like so. All right. There, 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 and there. Okay. So those are weekly levels, right? And we see this break that we got, and we came back to retest that level, right? You can see it really, really clear here, the support level. Okay. So we know we got a break of a key level of support. Now we want to see if we're able to stay below that level and continue to the downside, right? See if we continue to the downside. So those are support and resistance levels on the weekly. Whoops. Take these off. Let's go back. There we go. Okay. There we go. All right. We'll take these and link these down also. All right. Like so. Okay. Now we'll go to the daily. Same thing. Same thing. Resistance level there. There. And there. Support level here. And here, right? We broke through this level, but we don't have a swing low yet. Okay. Don't have a swing low yet. We need 2 more days, 2 more candles to the right to give us a swing low. So we're going to keep those in there for now. Right? Understanding that midweek, we could have a new swing low here on the daily time frame, right? And this level will drop down and this level will go away. Okay. So just from an awareness standpoint, we'll drop down, get these levels here just for future. Okay, like so. All right, so that's our daily support and resistance. Like that. Okay. Now let's look at it from a Fibonacci perspective. Bingo. Okay, so from a daily time frame perspective, we hit a D extension, and we're getting a retracement, right? Hit an extension, we're getting a retracement. Okay, price is pressing back down, strong bullish move, right? And now we're getting price to press back down to take back some of this candle. So we talked about on the higher time frame, right, that we broke this key level. We broke this key level, right? Strong movement to the downside, but now we're in a down retracement zone. So we could get a retracement deeper than just this retest before we get a continuation. Okay. So as you get down the time frames, you can see the wave sequence and how it plays out, right? So we're in a down retracement zone currently. Don't have a new AB boundary just yet, right? We need those two candles to the right to form. So we'll drop these daily levels down to our lower time frames. Okay. Like so. All right. So here on the 4, we want to look at it from a Fibonacci perspective as well. Okay. We'll run our fib off the high. Bingo. Now look, so daily we got a new AB boundary here on the 4. Shallow retracement, push down into the 118, 127 zone. And we got to push up, right? Now we're taking back some of this move, but we haven't gotten to this 382 on the 4-hour time frame yet. Okay. So now we want to see, do we get price to turn back over to give us a deeper retracement before we get a continuation lower? Okay. Other thing you have here, right, in this tight consolidation is another potential crown reversal pattern here. Technically, that's your low. Took out your previous high. Now we're looking at this retracement and then see if we get a continuation deeper, get us to that 382. Okay, so a couple things you can do from here. All right, here on the 4-hour time frame, you know you got this impulsive move to the upside, right? You know we're tracking this, at least this 4-hour 382 as the retracement. So you can run your sub fib, right? Smaller waves to the upside to track this move. Okay. Do this on the 4-hour, and we'll look at it on the lower time frames as well, right? Push up, nice impulsive move. Now we're getting a retracement coming back into our buy zone. Okay. We like to see price get back to the 618 retracement level, right? Which is also in line with previous resistance. Okay. So we want to see if we get a nice pullback before we get this continuation, which would also be in line with this crown pattern potentially playing out, right? So looking for a little bit of a deeper push on this retracement, and then see if we get another push to the upside to get to this 382. Okay. We're watching these Swissy pairs for this retracement opportunity, and we got it. Okay. So looking for another push to the upside there. So that's one way you can look at it. The other way, drop down to the 1-hour time frame. Take these levels out. And you can run your fib here on the 1-hour time frame. Okay. See this crown pattern a little bit clearer here on the 1, but run the fib here off the 1 hour like so, right? Now, if you get that deeper push off of this 4 hour time frame, it could take out the fib on the one, and that's okay, right? That's okay. Right. So that 618 off the 4 hour sub fib, right, takes out the A here on the 1 hour. Okay. So you can look at it like this. We don't have a swing low yet, so that wouldn't count. All right. So that wouldn't, this is what we're looking at. So that A will get taken up first. We won't be able to run a sub fib off the high here until we get a swing low to form. So we're just looking at this retracement. Okay. Now, if you want to trade this off the 1 hour time frame, my suggestion would be to wait until you get a swing low to form, and then you can run the sub fib off of the high, off of the high to the downside, like so. And that'll give you some levels to play with, right? If the swing low forms here, if the swing low does form here, right, this 118 to 127 zone will put you right in line with that 618 retracement. Sorry about that. 618 retracement off the 4 hour sub fib. Okay. So this is what we're looking at. Another push to the downside, and then see if we get a reversal and continuation higher before price turns over and pushes lower on this pair. Okay. Questions on the Aussie Swiss? Questions on the process? No? Okay. All right, so let's see Aussie Swiss. Aussie Yen. Still looking for a deeper retracement here as well. Okay. Monthly time frame. Okay. All-time high, all-time low. Okay. All-time low there. All right. See the range. Bottom of the range, top of the range, bottom of the range, top of the range, bottom of the range, pushing back to the top of the range. Okay. So support and resistance. Okay. These lines are still here because we don't have 2 months to the right just yet of that swing high. So that will stay. Resistance. But what this also tells us is this zone is relatively strong, right? Long wick, not able to break above that level, right? And we're hovering sideways, okay? So it gives you an indication of what could occur in the future, right? So there's our support and resistance. So we'll link all this down to our lower time frames and do it all over again. Okay. Like so. So new folks that are with us, you gotta be willing to go through the process. And this is the process, right? Marking up your charts step by step by step, right? When I was starting out, I would mark my charts every day, right? So I had to get it. I had to understand it. And I had to see it more clearly. You hear Benny say all the time, repetition is the mother of all skill. The more you do it, the better you become, right? It's going to be difficult at first, but you'll get better. Just like riding a bike, just like learning any other skill, playing a sport, learning your job, right? You didn't know how to do it at the very beginning, but you trained, you practiced, and the better you got, right? Same thing here. Same thing here. So I'm going to run the fib on the weekly time frame because there's some key information here that I want to see, right? And we've seen this in the past, right? We've looked at this fib, but we never got a 382 off of the weekly time frame, and we're just hovering at this B boundary zone. Now we know monetary policy has not changed for the yen. They're still ultra loose. Last month, they came in and did some intervention, right? Some buying of bonds. But at the end of the day, we're still sitting in this B boundary zone for this Aussie yen pair. Okay. Still sitting in the zone. So we want to see, we weren't able to break out to the upside, right? Not able to break out to the downside. So we're ranging at the moment, but we want to see at some point, does this turn over and press deeper to get us to at least that 382 level? Okay. So as we get to the daily time frame, see that range just a little bit better. We'll get our support and resistance in. And then we'll look at the fib. Like so. All right. Change that to red. Support levels there. And there. Okay. That's it. That's it. All right. So pull these out. We'll zoom back out. And we'll run our fib from the low. All right. Run our fib from the low because currently we're in this uptrend, right? Price moving to the upside. So here on the daily, we did get a 382 retracement, but we haven't been able to break out to the upside, right? We haven't been able to break out to the upside. So that just tells us we want to watch this zone, right? This is that long wick that we saw on the monthly time frame, right? We want to watch to see what happens here. Okay. Not able to break to the downside, not able to break to the upside. So we want to see, does price at some point turn over and press deeper, right, to get us at 382 on the weekly time frame, or do we finally break out and push higher, right? And do we get to that 118 and 127 zone on the weekly time frame, right? That's what we want to see develop, one of the two options, okay? But dovish Reserve Bank of Australia and we'll call it a dovish yen, right? So when you get currencies that are similar from the perspective of either being dovish or not changing monetary policy, right? They kind of be in the same boat. So we're getting the sideways movement here at this B boundary zone. Okay. So that's where we sit from a daily perspective. It's still in between. Okay. Still in between. So as we drop down in the time frames, take these daily levels down. So and then we get to the 4, and we'll run our fib on the 4. So we're going to look at this one from two perspectives. Okay. Two perspectives. Look at it coming from the bottom to the top, and then we'll look at it from the top to the bottom. All right. So coming from the bottom to the top, so that got taken out, and then we ranged. All right, perfect. So we're running our fibs from the bottom to the top, and we see that the fib continues to get taken out as we push to the upside. So that brings us to the top anyway. Okay, that brings us to the top. So we'll run our fib from top down. And this is where we sit, right? This is our active fib on the 4-hour time frame, right? So what we're looking for is a deeper retracement, right? See if price stays within this AB boundary and then potentially moves back down, right? We have to watch to see how this develops, but what we want, right? We got a shallow retracement, price pushing to the 118, 127 zone. So we want to see if we get this deeper retracement here. Okay. Oops. That's what we want to see, right? We're just ranging right now, just ranging right now. So this one, I'd also just sit to the side and watch to see what develops. Now, if you break below this daily level, right, zoom back, right? And this is a strong daily level here, okay? Price has played at multiple times. So if price continues to press to the downside here and breaks below this daily level, right, we'll wait for it to get to the D extension, give us a new AB boundary. Then we'll be able to play the retracement, and then that'll give us confirmation that we could be ready to break out of this range and press to the downside. Okay. So if that occurs, right, if then statements, if price does this, then I will do this, right? If price breaks to the downside, that's what I'm looking for. If price gives me that deep retracement, I'll look for a selling opportunity to sell it down to the matching D extension. Okay, so as you're writing your rules, you want to ensure that you're using those if-then statements. Okay. If then helps to remove the emotion from the process, right? And sheerly looking at price action and what the market is telling you, not how you feel, right? Not how you feel, because our feelings can twist us up in this game, right? We can start chasing things that don't exist. So we want to ensure that we're looking at what's actually happening in the moment to determine what we do next, right? So that's the 4-hour look on the Aussie yen. Drop to the 1, and we'll look at it the same way. Run your fib off the high, like so. So here on your 1, you got a 382 retracement, right? Still looking for a deeper push. So we're getting this pullback now. Right? We want to see if this turns over and presses higher to give us a deeper push. Okay. We'd love to see this to give us a selling opportunity, right? So that's the Aussie yen. Any questions here? Is seeing this process helpful for anyone? Yes, no, maybe. Okay. All right. That's the Aussie yen. Aussie dollar. Similar look to the Aussie yen. Clear it out. We'll start from scratch. So how often you clear out your charts and remark them will totally be up to you. Most times I do it monthly, depending on what's happening. I could do it quarterly, depending on the moves and the scenarios that are playing out. But from a monthly perspective, let's see. I didn't clear this one out. We'll leave these levels in. Okay. We'll leave these monthly levels in, and then we'll just take those down to the lower time frames, right? Save us one time frame to do, but you see those swing highs and swing lows here. I didn't mark these higher. It'll be a while before we get back up there, right? So we got our swing highs there. We got our swing lows here. Okay, so we'll link these down to the lower time frames. We'll come to the weekly. Okay, come to the weekly, support and resistance. Okay. Resistance, resistance. Got a support level here. Support level there. Hold on one second, everybody. All right. So that's support and resistance on the weekly time frame. We see we've been pressing down since 2020 and coming down, right? And there's not much here from a weekly perspective that gives us an opportunity to really turn over from a support resistance perspective, right? So overall, not much that'll stop us from continuing to the downside here, right? Now, looking at it from a fundamental perspective, right? You still have a hawkish Fed, even though everybody's saying, oh, they might change their mind. They've been saying they might change their mind for 3 or 4 months now, and they have not, okay? So you want to take what they actually say, not what we assume they say, and we'll see what happens as the month moves on. Okay, so that's the weekly time frame perspective. A couple things you can do here, right? You can run your fib off the high. You see we did hit a D extension, right? Off of this fib to the downside, right? So we could be in for a slight retracement before we get a continuation. We'll see. Okay, we'll see. But that's your AB boundary there. So on your actually take these down to the lower time frames. Like so. Okay. Now on your daily, we'll look at it again. Okay. Support and resistance. So we got some new levels here. Okay. Got some new levels. There. We got a newfound support here on the daily. Okay. New swing low. Okay. So now we'll run our fib off the high, see where all of this falls. Remember, off the weekly time frame, we hit a D extension. Okay. And look, here on the daily time frame, we also hit a D extension. Okay. So what this tells us is we could, good chance that we're in for a retracement of some sort, right? It's been a strong move to the downside, and now we're getting this consolidation here. So we could see a retracement occur before we get a continuation lower, right? So on the weekly time frame, we didn't have much stopping us to the downside. Here on the daily, we got a couple levels that price would have to break through. We'll see what happens. So looking for a new AB boundary to form. We got a swing low. So the new AB boundary, once it pops in, will look like that. Okay. So now one of two things can happen from here. Either we break the low, come down into that 118 and 127 zone, and then we get a retracement, or price turns over and gives us a retracement. Okay. We got this daily resistance level in line with this 50% retracement level. All right. So this will be a key level to watch. We like 618 and deeper. However, when you have these key fib levels, 50% and deeper, that come in line with key support and resistance zones, we watch those, right? We watch those because that could be, right, an ideal reversal spot, right? Because you got a strong level of support there, or resistance here, I'm sorry. All right, so we'll watch that, right? That's what the fib will look like once it pops in. Okay, so that's the daily look. We'll take these levels down to our lower time frames. Like so. Like so. Okay. All right. So take those down. Let's start to the 4. See what the fib tells us on the 4. See if we have any more confluence, any more additional details that give us the same story. Okay. There we go. So look, we got a new AB boundary on the weekly time frame and on the daily time frame. Here on the 4-hour time frame, just missed the D extension, right? Came just shy. Shallow retracement, hovering in the 118 and 127 zone, right? Sideways push here. So this is an indication, right? Details giving us a similar story to the higher time frames. We could be in for this retracement to occur. Okay. So you want to watch this closely to see one of two things, right? If price turns over and pushes up, give you that retracement, or what could also occur before we get to Friday is price pushes down and actually achieves that D extension, right? And gives you a double bottom look, right? Gives you a double bottom look. And then we could see that retracement. So we'll watch this to see. It's hovering in our zone on the 4-hour time frame right now. Okay. Let's see. It's 100 pips to the D extension. Right. So we want to watch this to see how this develops. Okay. Now the third option, right? The third door is price barrels through this daily level, right? Gives us a pullback and a retest and a continuation, right? So if the data comes in extremely hot on Friday, this third option could occur, right? The data comes in right in line or below, then we could see this 80-20 scenario play out, give us a deeper retracement before we see price turn back over and press to the downside. Okay, so that's the 4-hour look. Those are the 3 potential options that we could see. Okay, so as we get down to the 1, right? Oops. We'll run our fib off the high, like so. What we see is that A got taken out, right? With this push up, took out your A. So what we do is we flip the fib. Once that A gets taken out, flip the fib. Bang, right? So now we got AB boundary. We got a 50% retracement. We're back retesting that 50% retracement level now. Okay, so we want to see, does price turn over and start to give us that retracement now? Get to that 1-hour D extension and then go deeper? Or do we press back down to the bottom of this range, right? This is the range that we're hovering in right now. Okay. So we get to the bottom of the range, we could see it press back to the top, give us that double bottom look on the higher time frame, and then continue moving. Okay. So watch this one, let this one develop. We're ranging right now. So we could see this range a little further before we get a breakout in one direction or the other. So Gordon, we don't look at sniper entries. We look at entries that meet our rules. So that time frame is going to be based on whatever time frame you choose to trade on. If you're an intraday trader, you're going to look at your 1 hour, 15-minute as far as your entry, where you enter your trades on, and the chart, the time frames that you trade from. But as far as entries go, we look at entries that meet our rules, and we set our stop outside the A if we're trading with the trend, and outside the 118 to 127 zone or the D extension if we're trading the counter trend moves. So, but that's going to be based on how you write your rules. Like I said, we don't look at sniper entries. That's not how we trade. We don't think there is a perfect entry. We think there are entries that meet your rules, and you have to give the trade room to breathe unless you're okay with being stopped out multiple times before a trade moves in your favor. So that's why it wasn't mentioned in any of those videos. We don't look at sniper entries. The methodology that we teach can be used on any time frame. So if you want to drop down to the lower time frames, so you do have tighter stops, you can do that. The methodology and the process is still the same, regardless of the time frame that you're on. Does that make sense? So you can be a scalper and still use this process. Your stop loss is going to be based on your account size and what you choose to do, right? As we swing trade, yes, we use wider stops to give the trade room to breathe, because we know it can range anywhere within that AB boundary. If you want to place your stop tighter, by all means you can. Just know you might get stopped out if you place your stop, let's say, below the C, right? You could get stopped out multiple times if price presses lower before it reverses, right? So how you can kind of mitigate that is wait for a new swing low to form and wait for a trend line break and then enter the trade from there. Or as Benny talked about over the weekend, right? Waiting for price to push above the B boundary, give you a nice support level, and then you can take your trade from there and ride that trade to the upside for the long term. So that'll be totally up to you. But that's how we look at that. Does that make sense, Carolyn? Yeah. Okay. So Gordon, just to give you an example, right? So we drop down here to the 15-minute time frame, and the methodology is still the same, right? You got your higher time frame support and resistance levels, right? And you run your fibs just the same. So you got AB boundary here, okay? 8.6 retracement level, price got to the 8.6, so this should be a new fib here. You got an impulsive move there, but it's the same, right? So on this one, your stop would have been outside your A, like so. Your entry would have been here off your trend line break, right? So now on the 15-minute time frame, you're looking at a stop loss of 13 pips, right? And you can do 2 to 1, 3 to 1, or take it to the matching D extension, which would have been quite a bit larger. Okay. Even on the 5-minute time frame, like so, still the same, right? So here you run your fib off the high, you got your impulsive move to the downside, right? This one ran to the D extension, so now you'll be looking for a new AB boundary to form to the downside. If you look at this move here, right? New AB boundary formed, what you could have done here off the new AB boundary, place your stop above the B, like so, right? Entry off your trend line break, should have been here, okay? All right, if you ran your trend line to the upside, trend line to the upside, actually would have been higher. So your entry would have been there off your break. So now you're looking at 15 pip stop loss, right? If you take that to the 382, you're looking at a 22 pip gain. If you take it down to the 618, you're looking at 48, right? So that's your 2 to 1 there. And then 3 to 1 would have been your 8.6 retracement level, right? So if you want to scalp this, the process is exactly the same. No changes. And that's the beauty of the methodology that we teach is doesn't matter the type of trader you are, you can keep the same process, right? You don't have to learn 17 ways to trade in order to do something, right? It's the same thing, same process. Top-down analysis gives you overall direction. You run your fibs and look at it exactly the same. You can even do it on the 1-minute time frame. All right. Like so, right? Same thing. Same process, right? Fresh AB boundary here. You got your retracement, wait for a deep retracement, and then you can see, right, if your rules are met to enter trade to the downside. But the waves move the same regardless. All right. Any questions on anything that we covered this morning? Gordon, I hope that made sense to you. No questions? All right, cool deal. Benny will be back with us tonight, 9 p.m. Eastern Standard Time for the Asian session. Yeah, keep your eyes peeled on some of these pairs, man, right? If you haven't completed your top-down analysis on all your pairs, definitely do so. And we'll see you tonight, all right? That's a wrap for today. Have a great day, everybody. Peace.
Thank you.
You're welcome.